Welcome all to another episode of Live with Panis. Today we have with us Alessandro Hatami, based in London. Alessandro is an experienced fintech thought leader. He wrote also some books, but we will jump with him immediately to the discussion and learn more about him and go through discuss a bit the fintech scene in Cyprus and globally and other in other regions. Welcome, Alessandro, to Live with Panis Podcast. Let's start from the beginning. Who is Alessandro Hatami? From young age, and now you're in many years after in the fintech financial space.
Yes. Yeah. Well, thank you very much for inviting me, Panis. My background is I'm Italian, Iranian, a civil engineer by training, but then went and got an MBA and got into financial services. So I have this mindset of the engineer of looking at how things work and with the understanding of the economics and the finance. So after my MBA, I started working with a big multinational, G Capital, and that's how I got into financial services. And that's how I got into fintech. So after that, I joined an incubator in the year 2000, which is before incubators were called incubators. They were called them accelerators. After that, I joined PayPal as employee number 11 in the UK to build their businesses here. I was the CEO of PayPoint.net. And after that, I joined Lloyds Banking Group as the COO of digital banking. And the group innovation director. I then left to create my own firm called Pacemakers. And we're a specialist advisory firm helping corporates find the right company to partner. And by partner, we mean not only joint venture and collaboration, but also acquisition. In fact, we work mainly on acquisitions. So we help large companies identify who will be the right organization to acquire to be able to build the transformation that they want to achieve. So think of us like a headhunter, an executive search firm where the client comes to us and says, I want to build this new thing. We give them an understanding of how the market is moving in that direction. We describe all the players from IBM and Accenture at one end and the Indian startup with 4 employees at the others. And then we help them choose in this long list of potential targets, which one is the right company for them to work with. And that keeps me quite busy. In parallel, I do a lot of mentoring of startups and early stage companies. I invest once in a while in them. I speak publicly, and you did mention my book, co-written with Helen Panzerino, called Reinventing Banking, which was rated Best Book on Banking of 2022 by Investopedia in the States. And it's a book about describing how the financial services industry is changing and how we need to adapt to it. And it's not going to be a gradual change, but it's going to be a transformational change. I think it's an interesting book. I think if you haven't read it, I suggest you buy one. so yeah, that's it. Definitely.
Yeah, I would love to buy one, or maybe you have a copy, you can bring me one when you join Cyprus next week.
Absolutely.
Cyprus Fintech Summit. One of the reasons we are doing also this podcast is Alessandro will be one of the panelists in the future fintech panel discussion on the Cyprus Fintech Summit happening next week, 1st of September in Cyprus. Very interesting things. I would love to stay almost a bit in your PayPal experience, because everybody is talking about the PayPal. I don't know if you met also Elon back on the days.
I met him when he was leaving. I came in when he was leaving, so very briefly.
Yeah, I mean, and with the discussion of PayPal, I mean, PayPal started small, became a global company. What is your thoughts on that? I mean, how if you have like a new startup to maybe mentor or advise at least in front of you, what you would say to them?
Well, I think one thing about PayPal is that they were not necessarily in love with their product. They were in love with what the product could do. So they very much focused on delivering a solution that actually was tangible. So they weren't saying, look how amazing PayPal is, and they were saying, look how easy it is to pay. By the way, you could use PayPal. So that element of it is fundamental to any success of any fintech. I always say, think about who your end users is going to be and translate your story in a way that they can appreciate and they can benefit from. And PayPal did that very well. So they looked at very early on what would be the ideal place for their proposition to work, and they went to eBay. So eBay also was a nascent company at the time. And they realized that when people trying to sell stuff to each other, they needed an easy payment solution that allowed an individual to send money to another individual. And we're talking late 90s, early noughties in the States, where still checks were everything, and that was the only option. And the payment solution that eBay had created was not good enough. And PayPal was being adopted by more and more people. So that's how they realized their benefit. They realized that was a unique opportunity for them to present themselves in the right way. They also did some crazy marketing things. So if you proposed a new person to join PayPal, you would get $20 cash from PayPal. And that almost took him bankrupt, but it generated a customer base that was very hard to beat. And they experimented. So they pushed everything to the borders. They made mistakes. They tried new things. And at the same time, when the mistake didn't work out, they would walk back and rethink it through. So pivoting was a normal thing. So there wasn't a fear, or this is what we are, this is what we do. It was always, what does the market want us to do? And that's, I think, the secret of success of any fintech or business.
Yeah. And if we can see also, Revolut has been doing the same stuff, growing very fast, at least in UK now, globally. This refer a friend SIM, let's say, marketing wise. Let's see if Revolut will have had the same.
Revolut is an outstanding business.
Future.
I think Revolut is very successful. They are experimenting everything when it comes out. They're creating a very wide variety of services. And again, very much like PayPal, they are focused on what their customers are asking or needing. So it's really interesting because I recently did a podcast for London Business School. And the concept of customer need and customer want are not necessarily the same thing. Okay, so customer want is what the customer asks you for. So that means that the customer has a vision of what they want and they ask you for it. The customer need is what they actually need. So if you have an alternative, an innovative solution that can deliver them what they need, they will not ask for that. Okay, they will ask for the older solution. So for example, if you think about when the car was introduced, if you went to people who were riding carriages and you asked them, what would you need? They would never describe the car. They would describe the better carriage. But when the car was introduced, everybody eventually shifted to the car because it was a better product, but nobody could think about the car. So as an innovator, the job of the innovator is to think about the customers or the end users' needs rather than the wants, because the want is the short-term sell, the need is the long-term relationship. And I think Revolut is very much focused on that.
Yeah, they are very focused also to the needs and UX of the customer, especially.
Yeah.
I love their UX and how fast you can do stuff and how easy you can do stuff. But let's go back to Peacemakers. Can you elaborate more? I mean, how you can help people, companies, maybe small startup or big startups, where you focus?
We don't work on startups almost ever. So we work on scale-ups. So because corporates will work with startups, but they would never make a major investment on a startup. They need to have a certain confidence that the company that they're working with is able to deliver their needs. So we realize that financial services is changing dramatically because of technology. We realize that companies go through 3 stages of transformation. Income company goes through 3 stages of transformation. The first stage is they adapt. the adapt stage, where they adapt their products to new technology. So what they're doing, they're selling what was sold in the branches online with the same UX, not identical, but following the same steps and same data. In doing this, they create a series of assets that they can then evolve new products, and they create new things, but they're still anchored to the old solutions that they had in place. At that point, they reach a wall, which is a transformation wall. So they realize that their customers, their expectation, the market, etc., is not satisfied with the evolved vision of what they're offering. So they need to transform. And they realize that transformation oftentimes is not doable internally. So if you ask a incumbent company that is successful to transform, they find it very hard. Going back to the analogy of the car and the carriage, okay, the carriage companies in London that were running around all their carriages, if they told them to invent a car with a combustion engine, they would have a very hard time. Okay, so they would not be able to transform and rethink the future. So banks realize this, and they're saying, okay, so in order to do that, what do I need to do? This is work with third parties. And these third parties have to be companies that have certain characteristics that can deliver on their needs. But these characteristics and the partnerships collaboration between a large company and a small company often fails for reasons that are not necessarily technology. They're reasons of culture, of skills, of interface, a variety of things. So oftentimes you find companies making investments in early stage firms or innovative firms, and they fail for simple things, simple issues about collaboration, cooperation, culture, way of doing. We thought, okay, so we're seeing a lot of companies that are making investment in smaller firms to build something new. How can we create a service for them that allows them to be more successful in this activity? So we created Pacemakers following the examples of an executive search firm, as I said earlier. So a company comes to us and says, okay, I would like to understand how I can use AI to do a marketing of financial services to my wealth customers. So very, very precise. Okay. We go to the market and say, okay, the AI term, the spectrum of AI activity working in the sales of financial services, especially in the web sector, are these. These are the 5 trends that we see. These are the 50 companies that operate in that sector. As I said, there's some big global firms, Salesforce, et cetera, and then some early stage companies at the end, and the whole spectrum, imagine that. And we say the ones in the middle that are right for you, that have the right focus on the right customer, have the market understanding, have the right financial stability, et cetera, are these 5 companies. But then what we tell our clients is we have given the whole list. Okay. So we provide them with a smart, thought out approach to understanding the whole of the market when they make a decision and making an acquisition or an investment or collaboration. And this is very powerful because it allows our clients to make a smarter decision when choosing the right company. But also, if they've already chosen a company, they have an understanding of that was the right choice or not, in case they have to justify themselves to the board about why the acquisition was made. So we create a whole series of services in that space. And fundamentally, our skill set is twofold. So one is understanding the market and understanding the new companies and doing lots of research and understanding what the trends are. And on the other side is, having been ex-corporates ourselves, is we understand how the corporate operates. So we, for example, give advice to them is, make sure you bring in legal and compliance at the beginning of the process, not at the end. So never reveal a transformation to the rest of the company before you've gotten all the stakeholders on board. And very obvious things like this, but oftentimes when people make partnerships with external innovators, they make mistakes of this kind. So our expertise as professionals in having worked as executives in big companies also helps us in helping our client position the transformation internally more efficiently. So I hope that makes sense, Panis.
Yes. Yes, it's how corporates they do innovation. At the end of the day, when you bring your own experience, your own inventive new innovation methods, I imagine.
Mm-hmm.
And okay, your book with Helen is Reinventing Banking and Finance, the title. So.
Yes.
So a lot of people, they say that we need to disrupt banking and finance. It's about disrupting. It's about reinventing. It's about you mentioned earlier also, be it about that the change will be gradual, not. And
Mm-hmm.
what's your opinion on that? And, yeah, and who, if someone gets the book, what would read?
So first of all, the change is gradual initially, and then rapid, then quick. So what they will read is as I said, the changes, the stages of transformation, the adapt, evolve, transform stage. But also, for example, they realize that actually banking customers don't need all the products that the banks offer. They just need three things. So in the book, we say that a customer needs to pay or receive payment. The customer needs to get some credit if they need some extra cash. And they need to find a way of protecting what they've earned, the little surplus that they have. And this goes from savings to investments to insurance to pensions. Okay. So all these three things are what they need. And in the case of payments, they don't want all the options available to them. They want the bank just to tell them, do you want to send it fast or do you want to send it cheap? All the other things are irrelevant. So why do I have to worry about, should I be using TransferWise, Revolut, bank transfer, Swift, etc., etc.? I just say I have to pay Panis. What is the fastest way to pay Panis? Or what is the cheapest way to pay Panis? And that click happens, and then it's that. And I want to become, it has to be invisible, it has to be transparent and embedded in everything I do. On the credit side, all of us have relationships with our banks. We have from overdraft to personal loans to car loans to mortgages, etc. It's still the bank giving us money, but they charge us differently for it. Okay, and that's something that was created because as the banks evolved from the first bank to the future, they had to create different products and different ways for them to charge us. What I really want as a customer is I go to my bank and say, bank, I need to do this. How do I do it? Can you help me get the credit that the cash that I need to do this? And the bank provides me with an efficient, cost-efficient, time-efficient proposition that allows me to make a transaction. So that's the credit side. On the protection side, I at the end of the month, I may have a bit of extra money that's left over. I want to protect it. And I want to be able to have a variety of choices that the bank can provide me, from savings, but also to investments and pensions and so on. And in this case, the bank should not be embedded or forcing me to use only their products, but it should be a whole of market access for me. So if they're not able to provide me the crypto investment that I really want to do, they should be able to channel me to on somebody else that does that, and they still help me with the transaction. So all these three things together should then be connected by one element, which is trust. I need to be able to trust my bank. I need to be able to trust that the bank is the advice that the bank is giving me, that the pricing that I'm getting is fair. So that element of trust and advice is all together. So the bank of the future is going to have a payment solution, a credit solution, a protection solution, all brought together by an intelligent agent in the middle. And it sounds complicated, but it's not. All the pieces are here. And the philosophy of this, I think, and you find it in the book, is I say that the mindset that the banks need to have today is the mindset of the Bank of the Middle Ages. Okay. So the Bank of the Middle Ages was created as a dialogue, like what we're having you and me today. You are the bank, I'm the customer. I tell you my need, and you as the banker put together a series of services that you provide to me in a way that you can make money and I can deliver on my needs. Okay, covering me for my understanding my risk profile, understanding my potential, understanding my assets, and so on and so forth. And what was important in the Bank of the Middle Ages is that the banker and the bank and the customer were in the same community. So there was an element of trust built in there. The banker knew everything about the customer because they were in the same community. And the customer knew that if the banker treated them poorly, the reputation of the banker will be destroyed. So the banker will not be able to do business. So this element of balance between the two was a fundamental element to it. As banking grew and it became more industrialized, the banker got replaced by the bank manager. We didn't have complete control over how pricing is done, how products are created, and then eventually led to the bank of today, which is a store where you buy products with some advice, but you're buying products without really knowing exactly what the impact of each one of them is. So we need to go back to a place where the bank holds the hand of the customer and making them make the right choices to get them to do what they want to do. And they need to do this in a way that they can afford, but also in a way that is viable financially for the bank and for the customer themselves. And obviously very compliant.
Yeah, actually, Alessandro, this is very interesting that you're mentioning now in the Middle Age and how the banking was used to work, because it used to work a bit more decentralized, with smaller communities, banks of trust in the beginning. So how do you see now with the, let's say, the crypto and the decentralization that is coming with different protocols? I mean, where do you see this going? We'd love to have your opinion.
Yeah, I'm look, there's different types of crypto. Okay. So I think there's one that is purely a commodity, which is Bitcoin. So Bitcoin, the value of Bitcoin is driven by the belief that you and I have of its value. So if I'm willing to give you $10,000 for your Bitcoin and you're willing to sell it for that, that's the value of that Bitcoin. Okay. So it's like gold. Gold, the value of gold is driven by what the market thinks is the value. Then you have at the far end of it is the future, it's coming our way, which is the CBDCs and all the other currencies that are governed by the states. And it's interesting that we talk about them as if they're completely innovative, but the first CBDC was invented 1,500 years ago by the Chinese. It was the first banknotes. Okay. It was a piece of paper that we said it's worth this many yuan or whatever the currency was then. Okay. It was my belief and your belief that that piece of paper is worth the amount of money that it's there, because otherwise it's a piece of paper. Okay.
Yeah.
So the first crypto was invented many years ago. What's difficult, what's dangerous in between is the whole concept of the stable coins and all the other mechanisms that are created there. These are coins that their stability of the price is guaranteed by an entity that is not as big as a state. Okay. And potentially, depending on what model they use to create, I'm not an expert in what stable coins are doing, but they are creating baits for people with capital to go and try to break them, to short sell them so that they can create things. And all of this is creating instability. So as a concept, the concept of crypto is a natural place to go, because if we were to say to create currency with the technology of today, we would create crypto. Okay. No, if the Ming emperor that created the first banknote had access to the blockchain, he would create a cryptocurrency, wouldn't create a banknote. Okay. So it's very straightforward, and that is a logical step. What's missing is regulation. Okay.
Yeah.
So what's missing was the fact that the Ming emperor also said if somebody tries to copy that piece of paper, they will go to prison, or in fact, in their case, they will cut their hand off, and so on and so forth. The whole regulation about how it's done and what's required, what are the stamps of approval, what are all these guarantees, that is something that is missing right now. And what's absent in crypto, which will have to come in, is a regulation that is supportive of the concept, but at the same time protective of the end user. Okay. And we have that for all other financial services. We don't have it yet for crypto, but it's going there fast. The European Union has stepped up with some interesting things. The Chinese have established some interesting perspective. Even the Americans are slowly coming their way. And across the globe, there's about 100 experiments of different countries looking at CBDCs and so on. So governments are looking at it. So think of it again with the example that I brought of the automobile. The automobile was a dangerous product until they started putting road signs and stop signs and speed limits. Okay. And the answer to making the car safe is not what they did in England. That they said that if you drive around the car in the city, you have to have some guy with a red flag walking around like this. So obviously that wasn't a viable thing to generate to mobilize the whole country. Creation of rules is what is going to make crypto adopted by everybody. But between you and I think in 10 years' time, this debate on crypto will be irrelevant because currency will be crypto.
Yeah, because we're moving in a digital society. At least I know in London and in UK, we're moving to a cashless society.
Yeah.
Good or bad, maybe you have an opinion on that. I don't know. In Cyprus, this is becoming slowly. In other countries, more slowly. The Nordics are, the same. And eventually governments will say to me, why don't we have the digital euro, for example, or the digital dollar, or the digital yen, or etc. I mean,
Look,
how do you see this with regulation? Because if we see like companies like Revolut, they start like fintech, startups, they innovate, but then eventually they need to be authorized as banks from entities.
mhm.
I mean, all of them at the end of the day, all the fintechs at one point either they would be acquired by a big bank, or either they will become a bank on their own. At the end of the day, incorporate all the regulations, again become scale ups, bigger companies that they will need to again start to innovate from the beginning. Yeah.
Well, I disagree. I agree in part with what you're saying. I think to be a successful financial services company, you don't need to be a bank. PayPal is not a bank yet. They became a bank eventually, and in a limited way in Luxembourg, but there was no need for it for the UK. And I think what you want to focus on is how to deliver banking services in financial services. You don't necessarily need to be a bank. You just need to be regulated. And being regulated does not automatically make you a bank. There's many different levels of regulation. So I don't think that all fintechs will be acquired by banks and become banks. I think fintechs will create a series of services that will be channeled through the banks in collaboration with the banks, which will not necessarily be the banks of today. So there will be new banks that will be created, and the banks that we have today will have to find ways of justifying their experience, their existence beyond just the fact that we are here. So they will have to up their service capability, up their engagement with the customer, up their investment technology, and so on. And they will have to break some of their own taboos, because that's where the market is going. And if they don't, they will be replaced. I think the future is going to be one thing that is going to reunite everything in the future is going to be beneficial for the customer. So the customers will be able to receive payments, send payments, get credits, and invest their money more efficiently than they ever have before. Is this going to be provided by the local multinational bank, local or multinational bank? No, it's going to be delivered by a variety of people, and
How
they
do
will all
you
have
see
to be regulated.
how do you see the future of banks? How do you see the future of fintechs?
I
Or
think there will be a blurring of the line between what a bank and a fintech is. That's the thing. And again, what fintechs have done, they accelerated and challenged the way of doing business. So think about the early 2000s when the first e-commerce company started. Okay, there was this discussion about retailers and e-commerce companies, and they were seen as two separate things. Now they're converging. So every big retailer has an online offering. Amazon is creating the store offering. All they want is to be able to sell you stuff at price and service levels that you appreciate. Similar thing will happen with the banks. If you think about America, companies like Sears, Roebuck, which were around for hundreds of years, no longer exist. JCPenney is disappearing. All these big companies have gone very simply because they weren't able to adapt, and they were replaced by Amazon. Is Amazon the only retailer in the world? No. Is Amazon going to own all retail? Absolutely not. Is there going to be a multi-channel, multi-service capability that they will deliver? Absolutely yes. Okay. So what's happening, technology changes the way a business engages with its customers. If the business is unable to use technology efficiently, somebody else will. Okay. And if somebody else does, the business becomes irrelevant. So banks will have to innovate, will have to rethink of themselves, will have to reposition themselves. They have a gigantic series of assets. One is the trust of the customer, the relationship with the customer, and they still have capital. They have a huge liability, which is legacy. And legacy not in technology, but also legacy in the way of thinking, in way of creating, in way of engaging with the customer. Many banks still think of themselves as stores, as a place you go in and you buy the different financial products. Banks are actually solution providers, like the bank of the Middle Ages was. They have to rethink of themselves as such. If you think about Revolut, when you go into Revolut, you're not really thinking about what product do I want, why. You're thinking, what do I want to do? Okay? And that's a different mindset.
Yeah. And how do you see fintech industry to become more sustainable, inclusive, or is this buzzwords that we hear around an industry and around
Yeah, I think society has changed dramatically in the last 5 to 10 years, accelerated by COVID in a certain way. So what we need to think about is inclusivity and inclusion is going to become a normal thing for everything. And being a ESG is no longer just something that you say at your annual report in a bank. Is something the bank has to adapt. And the reason is multiple. One is customers expect their banks to be inclusive, to be socially viable, and to be green, if you want. Okay, and they will take their business away if their banks are not delivering this. We have seen already movements of companies saying that banks that invest in hydrocarbon are not going to be desirable. Banks that invest in dangerous industries, etc., will not be desirable for customers. And what happens with technology today, the fact that Bank X is investing or collaborating with an undesirable industry or undesirable individual becomes immediately visible. So I, as a customer of a bank, if I have some profound beliefs about what I want, I can immediately find out if my bank is doing something that I don't like. Okay, so that transparency is fundamental. So the banks are saying, okay, we have to adapt to what our customers want, and we have to create a series of responsible investing practices, but also operational practices internally on how we deal with employees, how we deal with customers, how we deal with suppliers, and so on and so forth. That's one dimension. The second dimension is employees. So employees of the banks. Employees of the banks are becoming increasingly vocal about how their banks operate. And they're becoming much more unaccepting on bad behavior. And the way they resolve this is not by demonstrating or doing strikes. They just walk away. And in a market that is completely transparent and completely visible, a valuable employee that decides that they don't want to stay with you reduces your talent pool, and it has a potential financial impact. So the banks themselves need to change because of these needs. Thirdly, is investors. Okay, so investors and companies and financial services organizations also are under the same pressure. So they will be demanding more and more that there's transparencies, that there's inclusion, that there's focus on the environment, that there's good governance, and so on and so forth. So that dimension also will impact the way financial services companies organize. And last but not least is regulation. Regulation will come in and impose certain levels of inclusion, certain level of focus on the environment, certain level of governance. And that is much slower than the other three, but it's happening also. Because government also comes on the back of people electing the government, their political leaders. The political leaders will change on the basis of what their mandate was to come into power. So I'm an optimist, and I think that our industry will become increasingly inclusive, increasingly green, and increasingly positively governed.
Okay, great. I mean, what inspired you? What inspired you to pursue a career in fintech and in financial finance?
Well, I started off my career as a civil engineer, and I was doing
infrastructure. Yeah, you are a civil engineer, so
yeah. So I was doing infrastructure projects in Africa, and I went to do a railway in Guinea. I was doing a railway in Nigeria. I realized roads in Sierra Leone, and so on and so forth. And one thing I realized is I was really focused on delivering these projects. I wanted them to happen. Also because as an engineer, you want things to happen. You don't want to just design, do a drawing, and then let it go. And what I realized that the vast majority of these projects failed for financial problems, okay? Or they had issues because the money wasn't there, because they hadn't thought about the financial product, and so on and so forth. So I was speaking to one of our experts, and he said, "Oh, Hatami, you need to go get an MBA to understand what this is." So I went to INSEAD and I got an MBA there. And the idea there was to go back to civil engineering, but with understanding of financial services. But then at that school, I realized that finance is actually a lot more deeper than what we think. So when I talk about my kids about finance, they get bored and they look at me as if I'm stupid. But the thing is, everything we do, everything that supports everything good in society has to have an economic element behind it. And we can pretend that it's not there, but it is. So understanding how that operates allows you to actually improve society and improve where we are. And that ideological thing that I had as an engineer is I try to transfer it into financial services. So when I think about a project, a startup that I mentor, a concept, I rarely think about how much money can I make on this, can we build something from this? Can this deliver something positive? And that's how I got from the natural extension from civil engineering to finance. Now, I'm not a saint by any stretch of the imagination, so I like to earn good money when I need it. But I think it's important as all of us not to be one-dimensional. So I also like to see projects that actually deliver value. And in fact, the next book that I'm writing right now is about inclusive fintech, inclusive capitalism, and how technology can actually make financial services more inclusive. And how that will make a difference. So the reason why where I am is because I wanted to combine the practical to the ideological and to build what I have.
Okay, you mentioned Africa. What are your thoughts about Africa? I mean, a lot of fintechs are trying to get into Africa. I mean, huge amount of people, a lot of people they are unbanked.
I think it's interesting. There's about 1 billion people around the world that are underbanked, but most of them have mobile phones. Okay, so using this concept of using technology as a means of making people financially independent or financially connected is a very important element. What has happened with fintech, at least in the beginning, is that fintech was designed to serve the richer world, so the developed world, and it lost. The very few fintech entrepreneurs right now, if you tell them what are your thoughts about the developing world, they don't have really a vision of what they want to do. But that doesn't mean that the developing world has not been creating new ideas, right? So let's start off by the creativity of people in developing countries is amazing. So I'm sure familiar with the story of M-Pesa and how M-Pesa was created from people sending minutes to their families. So people were going to the cities to work, leaving their family in the village. They gave the family a phone, and they would have a phone in the city that they would go in. When they got money, they would convert their money into minutes of speaking time, which then they would send to the phone that was in the village. And the person in the village would sell these minutes for cash. So in reality, what has happened is cash transferred between the city and the village with no bank in the middle. Okay. And this created the biggest financial institution in Tanzania and Kenya in a very short amount of time. So, and became so big that it became bigger than actually the financial institutions of the banking system in Tanzania and Kenya. That innovation, that capability shows that technology is actually not the enemy of inclusion, it's actually the friend of inclusion. And the fact that all of us, even in developing countries, have a mobile phone at hand makes it viable for financial inclusion to be driven by innovation technology. And I think that is where the challenge of the future is. I'm seeing a lot of really interesting propositions happening in Africa, where a cash society is becoming a cashless society, but a cashless society with a whole series of services that would not be possible with cash. Because if I'm a worker and I want to get paid for my services. If I'm in a cash-only society, the only way I can get paid is by having money sent to me in cash, in a physical form. And also, when I get this cash, how do I protect it? If I want to save some, the only place I have is to physically hide it somewhere, okay? Which makes it exposed to people stealing it, getting damaged, losing it, etc., etc. Also, I cannot buy things far away. So if the answer to my if the cheaper food or the cheaper equipment that I need to run my little business is not next door to me that I can go with cash, I have no way of getting this money to a distant individual. So fintech can become a way of making the life of the underbanked and the unbanked more efficient by making them banked. And again, the word of banked is interesting because maybe it's not banked, but financially connected is the word we should be thinking about.
Yeah, correct. For example, you mentioned building roads in Africa, etc. While you were discussing and mentioning the stuff, I imagine it came into my mind what WeChat, what is happening in China with WeChat. The basis of WeChat is, you can pay everything there.
Yeah.
Elon Musk now wants to do the same. At least the rumors, is he wants to do the same with Twitter X. If you, I want to ask you a question. If you want to answer yes, if no, if you had to consult Elon Musk in doing that from the financial perspective, the digital transformation, let's say, of X, what would be some first suggestion?
Well, I would never want to advise Elon, but I think I think X into a financial organization, I think is you need to find what the product is that you want to do. And I think social networks trying to convert directly into financial services provider have not done very well. So if you look at Amazon and trying to do their payment option, even with WhatsApp, it's not really flying off the shelves. What China did with WeChat, I think, is what was fundamental. Is firstly, it was a relatively new economy. So the Chinese user of WeChat was facing innovation in a way that was beyond what the X user is using. So let me explain myself a bit better. So I think there was an element of acceptance and adoption that the WeChat user would have that is greater than the X user will have. And that is because what can Elon Musk offer the X user that is better than what the X user already have? In the case of WeChat entered a market that was, especially in mainland China, the financial services were not well developed. So WeChat Pay and the ability to accept payments through QR codes and the ability of sending payments embedded in other services that WeChat was providing was something that was totally unique. There weren't no alternatives. There weren't any alternatives, but I think there's a lot of alternatives to what Elon can be providing. So in order to be successful, Elon will have to provide a service of payments that is easy to do, that is transparent, that is used by a vast majority of people, and that has an environment that is transactional and not necessarily focused on other things. So the X platform right now has is not necessarily seen as a place of exchanges, of friendly exchanges. It's seen as a place where people display and people ask for input and so on and so forth. And transforming that into a mainstream payment platform is definitely a possibility, but I really am not sure how he would be able to succeed with that. In order to do it, you would have to not create something from scratch, but partner with somebody, and I'm not sure who that would be. Maybe he'll go back to PayPal. Maybe it becomes PayPal X. I don't know.
Maybe. That's a possibility. Okay, you mentioned that you have mentored startups, fintech, and you have invested also in. As an investor, what do you see in a fintech company to invest, and you have some advices for them? Yeah.
Well, they hear my voice a lot, so they don't need my advice. But I think fundamentally, what advise with us here. I think when a company I invest, is two things. One is the quality of the people, and then secondly, the idea. Okay, because if the concept is there and the concept is good, if there's a bad team, that business will fail. If the concept is not perfect, but there's a good team, the good team will adapt the concept to make it work. So I think the quality of the team is the fundamental element, and secondly comes the proposition. That said, they are intrinsically linked, because a smart team will do the right proposition. So if you see a smart team doing something completely silly, that's not something you want to invest in. So it's a combination of the two things, and you have to be aware of. The last thing also that you have to be conscious of is where you think the market is going. So what's embedded with the good idea is this right for the market today or in the near future? And I think that is an element that has to be in the front of your mind. The ability to pivot is the biggest skill set that a team has to have.
And how do you see the investment scene now, especially from the fintech sector? Investments are dropping down because of the geopolitics and other stuff that happened.
Yeah.
How do you see going forward? Yeah.
Well, I think valuations and fintechs are contracting. They, for a variety of reasons, as you said. This will create two situations. I think one is businesses that were driven by equity investments to grow will have a hard time to continue their growth path. If the growth path doesn't happen, the valuation that they were built on will not also be valid. So we are seeing already a fall in valuations in companies that were seen as stars. Well, we're not seeing a gradual, just small change in valuation. We're seeing dramatic change in valuation. Okay, so a company going to 1/3 of what their value was, and even worse. So what does this mean? This means that potentially we run the risk of seeing some organizations that we thought were established entities doing well, not doing so well, and possibly disappearing. What we will see is a new class of investor coming in and making acquisitions for the objective of taking the business out or taking the business in. Okay, so I think we will see an increase in the corporate investment, not CVCs, but corporate investors, and going in and taking big chunks of businesses to then integrate them and incorporating them into their business. So I think in the next few months we will see a fall in the pure VC space, but we'll see an increase in the private equity venture capital space there, the CVC space. It's not the CVC, but the private. By CVC, I mean the corporate VCs. These are VCs that invest for the purpose of the upside. By private equity, I mean businesses acquiring a business for strategic intent.
Cool. Sandro, what is your daily motivation?
Is speaking with smart people and addressing smart questions. I think that is my daily motivation. You have to, when my life becomes a routine, I get bored. So I like to do different things all the time.
Yeah, imagine as a consultant and you need to ask the right questions.
You need to.
You have a lot. You have a lot of meetings with smart people. Yeah.
The reason I do all the things that I do is not because I have a lot of free time. It's because they help me fundamentally to do my business better. So I like to speak publicly a lot because I get a lot of interchange, a lot of ideas. So when you have to explain your thoughts, they become more distilled, more clear. I like to mentor because I work with these companies that work in the financial services space, and 9 times out of 10, they come in with an idea. They say, I want to do it this way, not the way you're doing it. And I explain to them why they have to do it the other way. And then they ask me why, and I explain to them why they have to do it that way. And 1 times out of 10, I don't know why that's the right answer. And that's where I learn from the startup. Okay. So it's that innovative idea that I want to have. So the mentoring keeps me on my toes all the time. investing allows you to engage with these companies for the longer term. So you go beyond just the conceptual, but you actually go into day-to-day running. So I love to do that. In my consulting business, it's great because we do a lot of research in our consulting. So research forces you to be very much up to date in all the stuff that is happening. And our USP is that of being both, as I said, an established ex-corporate person, but also aware of what the trends are. And all these things that I mentioned allows me to build a network and engaging with people, making friends that vary dramatically from size of company, industry, profile, age, etc., etc. And that makes my life fun. So that's what I enjoy.
Yeah, 1st of September, you are coming to Cyprus for Cyprus Fintech Summit.
Yes.
It's your first time in Cyprus? Or?
It's my first time in Cyprus. I'm really looking forward to it, yeah.
Okay. It will be hot. I don't know.
I mean, I'm used to it.
What is the London weather right now? But definitely here will be hot, so bring your swimsuit also.
I will do.
Good beaches in Limassol.
I heard the food is good too, so I'm very looking forward to it.
Yeah, if you went to Greece at any time for holidays, pretty much the same. Yeah, I mean, the people that will come to the event, what will expect either from you or we'll discuss the future of fintech in your panel.
Yeah, I think what they can expect from me is honesty and a vision that is possibly slightly different than what they had thought. I think it's important for a person in my role to be frank about our perspective, but also to be recognizing of the value of different people. So I don't want to say that the banks are always right or the fintechs are always right. I just want to say, tell my analysis of what the situation is. And they will hear the truth, or what I think is the truth. Let's put it this way.
Yeah, of course. Okay, the last question that I ask all my guests is: if you were building a tech company or a fintech company, what you would be doing?
Interesting. I think I would look at crypto and DLT, distributed ledger, and that, and I would create. If I were to do a business right now, I would create a wallet to be able to have CBDCs traded. Infrastructure for CBDCs. That's what I would be doing. So in Italy, they have this term that they, instead of saying fintech for fintechs, they talk about techfin, which is technology that supports financial services. I think fintech is great and it will have lots of legs, but techfin is growing. So technology that supports fintech or financial services is going to be great. So I would focus on infrastructure.
So many thanks for your time.
Pleasure.
We'll meet also in person next week in Cyprus Fintech Summit.
Absolutely. Looking forward to it.
Love to have your opinion in maybe some future podcasts that we probably would be doing around also fintech and financial. Yeah, many thanks.
Thanks, Panis.